business or are you running a business? Valuation is the ultimate KPI.
Hey there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor podcast, brought to you by Truelytics, the one and only comprehensive advisor transition management platform. This week on the show, I am joined by Steven Jarvis, the co-founder, CEO, and head CPA at Retirement Tax Services, a firm that works with financial advisors to help deliver massive value to your clients through tax planning and preparation. Now, don't worry, you're not going to need a double espresso or Red Bull to stay awake during this podcast. I promise. We're going to be having a lot of fun, and we're going to cover some really good stuff that is aimed at helping you increase the value of your business by delivering more value to your clients. Now, before we get to the show, I want to take a moment to highlight the new Solutions Partner Program Truelytics unveiled last week. If you are a consultant, a CPA like Steven, or an M&A professional who serves financial advisors and RIA firms, this program is for you. If you want to help your advisory clients improve their business, start by helping them understand their business with actionable benchmarks, valuation models, and other dynamic reports designed to highlight their strengths and weaknesses and opportunities for growth. To learn more, swing by info.truelytics.com/solutions-partner. Okay, lastly, make sure you subscribe to the podcast on Apple Podcasts, Spotify, Stitcher, SoundCloud, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or suggestion for a topic or a guest, even if that guest is you, be sure to reach out by shooting us a note, podcast@truelytics.com, or swing by and use that contact form on the Truelytics site. By the way, that's what Steven Jarvis did, and look at him now. He's like all famous and such. Okay, maybe not famous, but it is pretty cool that he gets to make an appearance on this show and spend some time with you and the other members of the Modern Financial Advisor community. So awesome stuff. Great to have Steven here. So speaking of Steven, let's get to the conversation with Steven Jarvis of Retirement Tax Services. Let's do it. Steven Jarvis, welcome to the Modern Financial Advisor podcast. Great to have you here, sir.
Mike, thanks so much for having me. I'm really excited to be here with you.
Well, you should be, because I make everybody feel welcome. We have a lot of fun on this show, and today's not going to be any exception. We're going to have a grand time, I think.
I just love expanding people's horizons to being able to have fun while talking about taxes. So this is going to be a great experience for me.
You are not the first tax professional that I have talked to over the last couple of months, right? I've had a couple of CPA experiences on a variety of different podcasts, and we've actually talked about like capital gains tax rate changes and what that might mean for an advisor's business if they're going to sell the business and all that type of stuff. And I have to say, I think we've cornered the market on all the engaging CPAs out there, because historically not known to be the most talkative bunch, the most animated bunch. So here's to you breaking the mold.
Well, thanks. Yeah, probably if you get to about a dozen or so CPAs that you know that have really solid social skills, you've probably cornered the market.
That's pretty good. It's really good. Well, I'm really excited. You reached out and took me up on the, hey, if you know somebody who would be a good guest for the show, please let us know. And it was so awesome to see you pop up in there like, hey, I think I might be a good guest for the show. I'm like, I love that. I love hearing from people who are listening to the show, number one, and suggesting topics or guests. And even if, and I say this every time, even if that guest is you, I'd love to hear from you. So I'm thrilled that you reached out. Let's kick things off, because I've been thinking about this a lot since you and I chatted. Last year, I had Sten Morgan on this podcast, and you've actually had him on your podcast. And in prep, we're talking about that. And you're like, oh yeah, I met Sten at a conference, this and that. We're talking about, he gave a talk on this, and we talked about this type of stuff, whatever. But on the show that he was on with me, one of the things that he mentioned was that he often leads conversations with new prospects with a conversation about tax strategies and how it can put real money in their pockets. And I'm like, that's fascinating. That's because it's like immediate money, right? Like, hey, let me show you how you can save 50 grand over the next couple of years or whatever. So I thought that'd be kind of a fun place to start this conversation is, why is tax planning and strategy so valuable to a financial advisor's client? So maybe we can articulate that a little bit better than I just kind of rambled.
Well, I'm glad you brought up Sten. He's a great advisor who's really crushing it. He's actually going to join me and co-host a webinar we're doing in August, which I'm really excited about, talking all about tax planning opportunities for small businesses. And the one other kind of point of clarification on what Sten's doing in those prospect meetings, he's not just saying, hey, Mike, if you come work with me and let me talk about these generic ideas that if you pay me all this money and come back later, I'll tell you the details. Sten gets up on his whiteboard in that prospect meeting before they've committed to anything, and he illustrates it for them for their specific situation. His goal is to give them enough information that if they wanted to, they could walk out the door and do it themselves. Now, that's not what happens because those people are looking for someone to help with the execution. So I'm just really impressed with Sten's really forward-looking approach to that. He's definitely really unique in the industry. But I think the reason he gets so much great response and great conversion rate of prospects to clients by doing that is because if we look at money as being an emotional thing, taxes is exponentially more so. And for the advisors listening to this, I would challenge you, if you don't agree with that, to the next time you're meeting with your clients, ask them 2 sets of questions and see which one you get a better response to. Ask them what their total tax bill last year was, and then ask them whether they got a refund or made a payment. Most of them are not going to know how much they paid in total taxes throughout the year, but pretty much all of us can tell you if we got to the end of the year and Aunt Iris sent us money or if we had to send Aunt Iris money, because it's just very emotional. There's something about saving $1,000 in taxes that makes us feel so much better than getting an extra $1,000 in returns in the market. I'm not a psychologist. I won't try to get into the reasons why that might be, but that's just my experience over and over again as I work with advisors and hear about their experiences. We all have this emotional reaction to taxes that when someone comes along and says, hey, if we work together on these proactive planning strategies, here's what we can do to kind of sand the rough edges off of your lifetime tax bill, people have a very strong reaction to that. It's very exciting for them.
Yeah, and I think, by the way, I mean, again, I'm not a psychologist either, and I don't play one on TV, but some of it is in our American psyche, right? Like our country was born with this, no taxation without representation ethos, if you will, and some folks today forget the without representation part and just like no taxation in their brain. Like that part is indelible in their brain. They hate taxes. They would gladly pay zero if they could pay zero, right? And by the way, all of us like to save money. We were talking before we clicked record here about how I need to go buy a new car because my car was recently totaled. And, I would like to pay as little as I have to pay for that car, right? I don't want to have to pay more for the car, so I like to save money. So I think I can appreciate it, and I certainly don't want to have to pay taxes on my car. Anyway, I digress.
Well, and it's that none of us want to personally pay taxes, because I'll have advisors who will hesitate to bring up tax planning with clients because they don't want to get into a political discussion. And I totally get that. I wouldn't encourage advisors to take that as their main approach of trying to solve all the political problems with their clients. But talking about tax planning is not a political discussion. I'm not going in front of clients or advisors and saying, here's what tax rates should be. I'm saying based on how tax laws are, here are things we can do to make sure we're not overpaying the IRS, or how I like to refer to it is not leaving a tip for the IRS, because there's no patriotic awards for paying extra. And if you run into that really rare client who's like, you know what, I just really feel like I should put as much as I can to our national tax bucket, great news, you can actually pay into the national debt. So still work with an advisor, still lower your required tax bill, and then if you still feel so inclined, you just go ahead and write that check to the national debt. I have yet to meet the person who's done that, but I know it's an option.
I love that we're having this conversation, and I love that we're kind of touching on some of the kind of the emotional components to this, right? Because I've often talked to advisors, and part of that conversation is how emotional finances in general are, right? That we as a society are somewhat uncomfortable talking about money. Most folks, even people who are very affluent and or wealthy, have some level of discomfort talking about money. And a lot of it's due to a lack of knowledge, right? So the discomfort comes from like, I don't feel comfortable 100% because I don't know as much as I think I probably should know about this. And taxation is definitely one of those areas, right? Nobody's read the tax code. I'm sure most CPAs have never read the tax code all the way or through, right? Like it's just, they just know how to look, right? They know how to go research any, specific areas. They know what to look for from the context of their clientele and so forth. But having a tax advisor in your corner is probably a helpful thing. And so let's talk a little bit more about that concept, because here's a little thing, I just kind of talked about the emotional weirdness of like people feeling a little uninformed. Most advisors are also uninformed in this area, right? I can say for 100% certainty with a lot of confidence, most financial advisors are not also CPAs. And in fact, it may shock some of the listeners, many of whom are financial advisors and many of whom are executives at wealth management firms who are listening and or watching the show. Relatively few financial advisors have a finance degree or studied finance in school. I know that would definitely shock clients, but it's just a reality, right? And even fewer of those studied accounting in school, right? Most financial advisors working today, and I say it ad nauseum at almost every single episode, most of them got their start as salespeople in this industry. They were stockbrokers, right? And so they came in more of a sales role. They probably were doing something completely different before they got into this industry. And they evolved over time to become what we consider a financial advisor today, right? They developed the skills on the job. They were educated by the firm that they worked for. Then even if they've broken off and gone solo or started their own independent RIA, they've developed those skills. They didn't necessarily graduate with those skills. So as we think about tax expertise being layered in or added into that, how does an advisor who's not a tax expert begin to start offering tax guidance to their clients?
That's a really great question, Mike. It's definitely a question I get a lot from advisors. The important part in what you said is that they need to start. You can't wait until some magical point in time where you think you're going to be an expert. Just like as you described that progression for a lot of advisors, I grew up around the industry. My dad definitely started out in insurance sales before he became a CFP. I think that describes the path for a lot of people. And you didn't wait until you've been doing this for 3 years before the first time you talked to a client or tried to sell a service or whatever it might have been. You've got to pick somewhere to start and then build on it. And so for advisors who have never touched taxes once in their life, there's a lot of great resources out there. I mean, if you're really brand new to taxes, Kitsis actually has a great course on reviewing a tax 1040 from an advisor's perspective. There's plenty of kind of some of those intro resources out there. The important part is starting and then committing to it and building. And some important terminology that I feel like helps advisors just get past some of the head trash around can I or can't I. The expectation from your clients is not that you're a tax expert. In fact, most of your clients who are going to have tax planning opportunities probably work with a tax preparer. And a tax preparer is not the same thing as having a tax planner. CPAs, enrolled agents, tax preparers tend to be very compliance focused and tend to be very historically focused, which are good things. Those are important things that help keep the IRS from knocking on our door. But they don't, that skill set doesn't necessarily translate into I can help you plan for 10, 20, 30 years in the future of how we minimize your tax bill over your lifetime. So the other thing that I try to really encourage advisors to do is just to embrace the fact that you can bring up tax planning and feel totally comfortable not being the final answer. So you can add value to your client. So Mike, if you come to me, you're a client, and I'm looking at your tax return with you, because advisors should all be looking at their clients' tax returns to make sure that the things they're doing are being reported correctly and to uncover opportunities. So if I'm looking at your tax return with you and I see in there that, okay, maybe you're itemizing your deductions, but only by a little bit each year, that you've just barely exceeded the standard deduction. And when I look at your Schedule A, it's because you make a lot of charitable contributions, but you're making $10,000 or $15,000 a year and you're just barely exceeding that standard deduction. So if I say, hey, Mike, I see that you're doing a lot of great things to give back to your community. That's really awesome. I want to make sure that we're helping you fulfill that goal. There's actually an opportunity for us to really maximize your tax benefit if we group these contributions every couple of years. And so, so I can bring up a pretty simple tax opportunity and then say, now, Mike, I want to make sure this gets reported correctly and this fits with whatever you're doing with your tax preparer. Could I schedule a time that all three of us could talk together so that we're working as a team to make sure that you're getting the most value possible?
I love it.
That's a real simple example, but that's how the conversation should go, especially if you're new to these kinds of things, regardless of the topic. Your job should be to help uncover these opportunities and show the client where there might be value. And then by all means, bring the tax preparer in to make sure that compliance piece gets met and to make sure you're not just creating conflict with another financial professional in your client's life.
One of the things that you said at the very beginning as you're talking about that just jumped out to me, that's really, I think, worth noting, right? Historically, we think of accounting, right, as you said, past looking or present looking, right? So it's either point in time, hey, here's a balance sheet, this is the way the things look like right now, or it's historic, here's the income statement, and whether that's a personal income statement or a business income statement, we're looking backwards, we're kind of seeing what happened or where things are right now. And that's historically has been the distinction between accounting and finances. Finance is looking forward. So if I'm a financial advisor, financial planner for you and your family, I'm looking forward in the client's life to help them plan for the future, the things that they want to accomplish, the goals they have for their life. And whether that, as you said, it could be college planning, it could be retirement, it could be buying a new home, vacation home, it could be their charitable endeavors, right? The things that they want to do, the impact they want to have on their community. Tax planning and tax strategy should be a core component of that, right? It's because of its forward-looking nature. Yes, of course, you're going to evaluate how much money did you make this year? What'd you do? Is there a way that we can shave your tax bill? Awesome. But also looking forward, like something I heard, maybe you can talk about this. This is an aside. It wasn't in the show notes. Something called income smoothing. I think that's, maybe I'm not using the right terminology, but like planning to make sure that as you go out, like you don't have a scenario where like you're paying way more in taxes in the future than you could have, or paying more taxes now than you should have, or whatever. It's like kind of making sure that you're not like jumping around in tax brackets. Maybe you could talk a little bit about like what that is. And because I think that's a benefit of, if I'm a financial advisor new to this concept, that might be something I want to have a little bit of knowledge about.
Yeah, and for some of my accounting friends out there, I will just say that income smoothing is probably not the term you want to use. That is usually more closely associated with corporate fraud and intentionally trying to have a nice, that was kind of Enron's thing of let's make it look like a nice straight line, because we all know businesses kind of go like this.
Dude, that's why I'm not the tax pro. I ask these questions and you can correct me with the terminology. It's great.
So yeah, so maybe we'll use a little bit different terminology, but you're right. If we take a proactive and multi-year approach, this is really where we can find those really great tax savings. If you wait until March of every year when it's tax time, when it's tax filing time, to look for where can we save money in taxes, your options are almost none. But if we look at the next 5, 10, 20 years, we look at over a client's lifetime, there's tons of opportunities. And it's to strategically decide when we're going to recognize income. And there's a couple of different really common ways that this comes up, whether it's related to capital gains or doing Roth conversions, potentially like sale of a business, things like that. Especially these one-time large income events where whether it's because we know we might be in a higher bracket because of our earnings in the future, or we are worried that Congress might raise tax rates on us. Don't know why anybody would be worried that might happen. You can look ahead and say, okay, I know these events are coming. Are there things I can start doing to accelerate some of that income? So I'm paying the taxes on it now, so that I'm preventing the IRS's ability from charging more taxes later. Capital loss harvesting gets talked about all the time in the industry as kind of this, like, I don't know, trying to put a really shiny sticker on a really crappy consolation prize, because to harvest capital losses, you had to have had losses. Right. And offsetting a little bit of taxable income is still not a great consolation prize. But you can also look at capital gains harvesting. And on a webinar I did for our audience last week, this is one of the topics that we talked about of some huge advantages to being able to elect when you're going to recognize a capital gain, because there's no wash sale rule for capital gains harvesting. So you could sell your stock and immediately repurchase it at the same amount. You have to pay the capital gains, but if you have a low income year and you're in the 0% or 15% capital gains bucket, and you know going forward that you're going to be in much higher brackets or capital gains rates might change, you have this opportunity to go ahead and take care of some of that tax liability now. Because at least as I talk to advisors about tax planning, and as I'm working with them on how they talk to their clients, got to make sure that it's really clear that everything we're talking about are things that are clearly allowed under the tax code. I am not secretly coaching advisors on these gimmicky ways to skirt the rules. That's not what this is at all. This is proactively looking at this complex mess that is the tax code and saying, if we combine these different strategies over time, we can come out ahead.
I like it. No, it's such a smart thing to think about, and it's to your point, like, waiting until the person's getting ready to file their taxes, or the event has happened. It might be too late, and also reshaping our thinking. I like that you brought up capital gains harvesting and not just capital, because almost every advisor will talk about tax loss harvesting, right? It's almost on every single advisor's. It's definitely on a lot of any type of pooled investment vehicle type of scenario account, or managed account, where they'll talk about, we do automatic tax loss harvesting. They talk about it all the time, as if harvesting losses is something to be like proud of, and everybody's looking forward to harvesting losses. Like, the old joke is like, I'd love to have a tax problem because that means I've made a shit ton of money, right? That's please give me one, right? That means I had a really good year, and I have to figure out how I'm going to pay all these taxes. At least that's the way I look at it. All right, I want to shift gears a little bit and to getting into how this can improve the value of the advisor's business. Because one of the core modules on the Truelytics platform that many of the listeners and viewers of this show are likely using, or it's how they became familiar with the podcast maybe, it's True Performance, right? It offers individual advisors or firms a detailed analysis of the performance of their business across like 50 plus KPIs. And those KPIs are benchmarked against other businesses that look similar to theirs, right? So if you've got $100 million AUM, it looks at other businesses that are similar, $100 million AUM, and how do you stack up against those? And one of those core use cases for True Performance is the valuation calculator, right? Like, all those KPIs kind of roll up and tell you how much is your business worth. And there's good use cases for that, right? You might be looking to buy another business. You might be looking to sell your business. You might be looking to refinance. And in order to borrow money, the lender is going to want to know, how much is your business worth, right? So I like to think about, like, okay, how is this going to contribute to the valuation of the business? Like, how much is this going to impact the advisor's bottom line, right? Because the number one thing, right, that contributes to your valuation is AUM for most advisors, because they have an AUM based model. They're earning fees on the AUM, and fees drive valuation. They just do, as the number one thing. So let's talk a little bit about how an advisor or a firm adding tax planning and strategy can lead to an increase in the firm's value. What type of increase in value? Maybe does it drive more AUM? Does it bring in more revenue for them? Let's talk a little bit about that.
Yeah, the single biggest thing really is going to be driving that AUM. And we can go back to, you brought up Stan Morgan at the beginning of the show. Yeah. He closes so many prospects by talking about tax planning. And he charges for his financial planning. And so that's included in what he's doing. I know several other advisors who, as they kind of look back over their career, when their firm really took off was when they got really focused on tax planning as a differentiator. And so, if they're charging under an AUM model, it's not that they're directly charging, here's my percentage for tax planning. They just kind of wrap it up in the fee they're charging, but it's driving more clients to them. It's driving their retention higher. For advisors who are charging both an AUM and planning fee, it might directly result in higher billings to clients. But I can just go down my list of advisors I work with who can clearly tie tax planning to closing more clients, to bringing in more assets under management.
So I like that. And that's a really good way of talking about this. If you are meeting with a prospect or even your existing clients, and now you're going to bring extra value to them with tax planning, that's awesome, right? Like, hey, listen, here's how I'm going to help you either save more money or reallocate your money, use it differently, right? Versus paying taxes, right? Or like you said, I even think about things like getting more consistent with how much I pay in taxes every year versus having it bounce around a little bit. I know you don't like that smoothing term, but having a better visual of like how much I'm going to pay in taxes versus like this might be some random number on me would be helpful. Help me in the other planning. But you're right, it can help with closing new business. It can help you. Most advisors don't have 100% of their clients' assets to manage. Usually they have some held away assets, and the more value you provide to your client, the more they likely are to bring those assets over.
Especially with advisors who are in that bucket that you just talked about of I'm only managing a portion of my client's assets. So if your current approach is, hey, you should bring all of your assets under me because it's not a very persuasive argument because I make more fees. I've heard all sorts of variations of that, but a lot of them just kind of, however subtly you word it, still sound like, hey, I want all of your assets because I want all of your assets. And tax planning is a great way to be able to show clients that, hey, there's so much more we can do if we can see everything that's going on. And if we're not having to coordinate between 4 or 5 different custodians and 3 different advisors when we look at these different, especially when we talk about filling up different tax brackets or accelerating income in different years, those plans all get blown up in a hurry if a client is working with more than one financial professional and they come to you and you say, hey, we should harvest these capital gains and fill up this bracket. But then their other advisor has told them, oh, wait, let's do this Roth conversion and fill up this different bracket. And now those all kind of go together and you've blown up the whole strategy.
Yeah.
So it can be a great way to help your client see the value of having everything in-house.
I love it. So let's talk a little bit more about integrating it into the business. So for those who are uninitiated, let's just say I'm a solo RIA out there. I'm managing that 100 million AUM. I have not been offering tax planning at all to my clients yet, other than the whole, hey, we got some tax loss harvesting stuff maybe to do. How do they go about integrating this with their business, right? What are the pieces? Obviously your firm does this, so you feel free to talk about like how you guys work. Retirement tax services, by the way, for those who forgot at the beginning when I introed this. Yeah, how do they go about integrating that into their business? Is this going to be another revenue line item for them, or is this just going to be, hey, listen, we offer this service through a partner, and we're not charging any extra for it, or is it depends upon the advisor? Give us a rundown of how this works.
Tax answers always start with it depends, but I'll try to cover as many of those as we can here. So the way I describe it to advisors is, first we have to all agree that there's value in tax planning, and it's I've yet to meet the advisor who I can't get to agree, okay, there is value there. Then we got to work on, okay, how does this work in practice? So as long as we're on the same page that there can be value in tax planning, you basically have 3 options. First option is keep doing what you're doing and hope and pray that your clients don't realize that other people are doing more. So that's option number 1. It's a pretty bad option if I'm being honest, but you can just keep doing what you're doing. Option 2 is you figure this out on your own. And this is a totally viable option. Some of the advisors I work with who helped start retirement tax services, that's how they got to the point of wanting to create this firm, was they had spent years, 10 plus years, figuring this stuff out on their own and just grinding away at it through a lot of trial and error. And then we decided, there's got to be a better way to teach advisors how to do this. But advisors are smart people. That grind will work. It'll just take a long time. And option number 3, which happens to be my favorite option, is you find a resource that you can partner with to hit the easy button on starting to do tax planning. And that's what we're offering through Retirement Tax Services, or RTS, as we like to call it, because the world doesn't have enough acronyms yet. So I mentioned it just a second ago, but we just had a webinar for our audience last week. And, if anybody listening to your show wants to send an email to advisors@rts.tax, I'd be happy to send them a recording of that webinar. It went over some great tax topics they can use right now. We talked about capital gain harvesting there, among other things. And then it also talks a little bit more about RTS's model. But really, our objective right now is working with advisors on providing education and resources on how do you deliver that value through tax planning. So, especially for advisors starting out, this isn't, hey, just send me your list of clients and I'm going to do tax planning for you. This is, let's work together so that you know how to start uncovering those opportunities for your clients. So, usually, a starting place I recommend for advisors who are new to this is, okay, look at your client base first, and this is a lot easier if you have a niche, but let's look at the clients you work with now, and let's narrow it down to a couple of opportunities that might be more relevant to that group so that you have a focus when you start and that you don't feel like you've got to pick up the tax code and read the whole thing, because nobody does that. So that you can pick these 2 or 3 things and you can start getting the reps in, learning about those and talking about those with clients. The other thing that really should go right hand in hand with that is you need to start asking all of your clients for their tax returns every single year. News is the first year, not all of your clients will take you up on this, so you can slowly build into this. So you can slowly start practicing how you review 1040s, things that you should be looking for, how you find opportunities and provide value to your clients. And those are some of the things that we help advisors do, is provide checklists and resources so that they know, okay, tax return is this big with all the extra forms and schedules. What do I even look at? So it's, okay, advisor that's joined up with as a member of RTS, here's the basic checklist of where you should start. And then let's work together on, okay, what do you move on to based on who your niche is?
I like that. Those are 2, well, several, but like 2 big concepts that really resonate with me. The one of like getting comfortable talking about certain things. It's always, it's kind of like what's in your wheelhouse, right? It's we talk a lot about niche marketing on this show. It's come up several times for advisors. Why is that so important? Yes, it makes your marketing very efficient, right? You know who you're talking to, and you know you're gone native. You know what they're. In fact, the episode that for those who are listening to this, the last episode we just published with Nick Cantrell, his firm Green Future Wealth Management, he's dealing with people who are really interested in green stuff. It was going green and taking care of the world, right? Environmental stuff and sustainability. But he also has a niche with the people who are into Fish, the band Fish. Like that's his, but it works for him, right? Like he's very, very targeted.
Yeah.
Bringing it full circle to the tax planning stuff is like, look, you don't have to be a tax expert, but find a couple of things where you just know not only you're looking for, but maybe if you've got a niche, maybe you can look at, as an example, we'll use Nick. If he's dealing with a lot of people who are very environmentally conscious, right, and making sure that their investment portfolios are sustainable and doing good in the world, there's lots of tax opportunities in that space, right? For energy efficiency, there's some new tax credits coming as an example for buying an electric car. That's passed the Senate Finance Committee. That stuff's coming down the pike, right? So being knowledgeable about those types of things can absolutely help your clients and make you stand out too, make you look really, really good. And then, of course, like you said, turn over to retirement tax services, RTS. Can help with that type of stuff. But I also like the notion of ask for the tax returns. Get used to the ask because they may ask you why, right? I would imagine your clients would be like, well, why do you need those? And then you'd say, well, we're going to help you with your tax return. It's good stuff. Tax planning, excuse me.
Yeah. So one of the other things we offer for our members is that we have an online forum that's moderated by our tax team, but it allows all these advisors who are interested in tax to interact with each other so they're learning from each other, because it can be kind of daunting. You brought the question of, okay, well, what if your client says, well, why do you need my tax return? And if you've never asked for a tax return before, that might feel like a really uncomfortable question for a couple of reasons. One, you might not be sure what to do with it. And 2, the next question after that might be, well, why didn't you ask for my tax return last year? But that's all head trash. So really, so we'll start with the second question of, well, why didn't you ask for it last year? It's, you know what, Mr. and Mrs. Client, I work really hard every year to make sure I am bringing more and more value to the service we provide to you. And this year I've been focused a lot on taxes. You've probably heard some headlines about potential upcoming tax changes. So we're asking all of our clients this year to provide their tax returns. So we're making sure we're providing as much value as possible. And clients aren't going to say no to that. And then if it's the question of, okay, well, why? We can start really simple. And this is the advantage of having a network of advisors who are doing this too, is you can learn from their stories. It doesn't even have to start as your stories. You can say, hey, I know an advisor who, and so not that long ago, I was talking to an advisor whose client's tax preparer had put their social security number into the tax return off by 1 digit. And even though it can feel like if you put a tax return into a software and it puts its stamp of approval on it, it must be perfect. It's not how software works. Lots of errors happen in software. And so the tax return got processed, it got accepted, they all moved on until that client started getting nasty grams from the IRS, accusing them of all sorts of terrible things. And then as the advisor was looking at the return with the client, realized that social security number was off by 1 digit. And so now as part of their process every year, someone on their team is checking the tax return of the client against the personal information they have in their CRM already. So that's just one example that you can give to clients of, hey, no, we're not going to prepare your taxes for you, but everything we do has tax implications. So this is just a way for us to add value to you by having a second set of eyes, making sure these things that, although rare, they do happen, and we can help you prevent them from being worse.
I love it. I love it. That's a fantastic bridge, by the way. It's kind of like one of the last topics I wanted to cover with you. And that's kind of it's not the best way to phrase it, but the risk to the advisor. And it's probably more risk to their ego, I think. There's often a feeling of risk, though, when an advisor considers swimming in a new waters, new pool, in which he or she is unfamiliar, right? I mean, so for instance, and I've been banging the desk on this one for a while, most investment advisors only advise on stocks, bonds, and mutual funds, marketable securities. They might advise on insurance, right? They're not advising on real estate investments. They're not advising on private investments, like whether it's angel investing in a startup or investing in a restaurant or some other local business. They tend to shy away from that. And when you ask them why not, it's either they don't know they're allowed to do that, or they haven't figured out the business model for it or whatever, but they definitely feel like that's out of my depth. Because going back to what I said earlier, most of them actually don't know how to run some financial models, right? They understand how to pick stocks or portfolios, whatever. They actually don't know how to go like, let me take a look at this. Does this make sense from an analysis type of perspective, a financial analysis and projection? So let's talk about the risk to the advisor, and bringing on something new or helping them get over that discomfort, I guess. How do you help advisors get over that discomfort? Because this is something new to them and they may feel apprehensive.
Yeah, it's pretty normal to have a little bit of apprehension about something new. I guess it depends on what you mean by risk. A lot of times I feel like when advisors bring that up related to taxes, really they're worried about something they recommend not working out correctly and getting sued, something to that effect.
Sure.
And honestly, this isn't trying to pass the buck, but that's part of the reason I encourage advisors to end their recommendation, as they bring up these opportunities, to say, let's find a time that we can talk together with your tax professional. It's not because you're trying to transfer all the liability to someone else. You should, as a professional, you should feel obligated to have done your due diligence and feel good about the recommendation you're making. But this is an easy one to get other people involved. That your client's never going to hold this against you. If your primary service you offer is picking those stocks and bonds, and at the end of that conversation you say, "Oh, but let's go double check with Mike at some unrelated firm," the client's gonna be like, "Wait, what? Why do we need to get a second opinion on that?" But that's not how people feel about taxes. As a financial advisor, if you are framing that conversation as, here's an opportunity we uncovered that we think is worth looking into. Here's what we think it might mean for you and the value to you. And now we'd love to coordinate a meeting with your tax professional to make sure this is a good fit. This is a winning situation for the client. And yeah. I can't promise that. Well, tons of people have been sued over tax things before. That tends to get into the more creative. In accounting, we usually use the word creative synonymous with fraud, but yeah, it certainly can happen. There's always the possibility you could end up with a nasty gram from the IRS, but that shouldn't. There's also always the possibility the stock market could go down.
That's right.
Risk of failure should not prevent you from trying. You should definitely go in informed and having the right partners as you go into it.
No, I think that's solid advice. I mean, the risk to your ego of pitching something that is new, offering something new, is low, right? I would say to every financial advisor who feels a little apprehensive about this, it's, hey, look, your clients consider you one of the most trusted people in their lives when it comes to finances because they've entrusted you with their money and their future, right? And so for you to bring the possibility of talking about another facet of their money to them is probably going to be welcomed, right? Is there business risk? Of course there is. Like it is, but there's business risk with everything. If you start working with, advising them to buy insurance, if you had never sold insurance before, there is a little bit of a business risk of you kind of fumbling it and not doing the best job or whatever. But I think that's why working with a company like yours, where it's like, that's what you do. And you focus exclusively on a distribution channel through advisors, right? So that's also what you do. So you're there and prepared.
The bigger risk I would encourage advisors to think about is what is the risk that your client learns about some of these opportunities and then realizes you've never brought them up to them. So one of the other planning opportunities we talked about on the webinar last week was what's called the Augusta Rule, which is not very well known, but it basically is an opportunity to have 14 days of tax-free rental income every year. It's not going to it's not going to triple someone's fortune to get 14 days of tax-free income, but it's a way to get tax-free income. And like we talked about earlier, taxes are emotional. People love ways to not pay taxes. So if you aren't staying up on tax opportunities and your client starts learning about these from other people, I'm not even talking about going and sitting down with other advisors. As these things just become more and more common knowledge, it's, well, hey Mike, why aren't you looking out for me on these types of opportunities? And you might say, well, hey, that's the tax preparer's job. For whatever reason, that's not how clients look at tax preparers. They look at their tax preparer as, you prepare my taxes, you file, you keep me compliant with the IRS. Most tax preparers are not putting themselves out there to do anything forward looking. Yeah. So there's exceptions, but most of your clients look at you as the person looking towards their future, and they look at their tax preparer as someone looking at their past.
Okay, so I got to ask, the Augusta Rule. I would assume it originated with somebody who has a home near Augusta and they want to rent it out during the Masters, and they found a way to do that tax-free.
Oh, they found a way. Tax laws are all made by people with the right amount of influence. That's so yes, the rule is literally named after Augusta, Georgia, where the Masters is. That's right. And it was specifically created for that. Like there's not even any cloak and daggers. Like that's right. That is what it is for. It has applications way beyond just Augusta, Georgia. Yeah.
I can see here in Austin, Texas. Dude, we have two massive, well, three if you include Formula One, but we have some big things that happen here in Austin every year. We have South by Southwest and Austin City Limits, right? ACO. Yeah. A lot of people get out of Dodge during South by because so many people come to this city and turn our city into just a couple 100,000 people downtown occupying every bar, restaurant, whatever. And so I have several, and it just happens to coincide, by the way, with spring break for the kids. Right, for kids to go to school here. So it's pretty much lines up perfectly. So I know I have so many friends of mine like, every year South by, I get out of Dodge, rent your house out, pay no tax. Yeah,
tax-free income.
Good stuff.
There's a couple of boxes you're going to want to check to make sure you've done it correctly. Yeah. The IRS does expect that you charge a market rate of rent, but hey, if there's some big event in town for the weekend, those market rates of rent are going to go through the roof.
Like $1,500 a night, right? Yeah, exactly. That's awesome.
Yeah, tax-free income, and it gets here's some other things that are great about it, because people will go back to that risk mindset of, oh, well, what if this goes wrong? You still report it to the IRS, which to me is great news, because this isn't something we're trying to sneak past them. It gets reported on Schedule E, which is where we report passive income, but then it immediately gets eliminated on Schedule E, so it never hits the front of your 1040. It doesn't go into AGI. It doesn't nowhere, and it still goes to the IRS. So you know that you're doing this on the up and up.
That's awesome.
And if you're a business owner, you can actually rent your personal residence to your business for up to 14 days a year. Tax-free income still gets deducted on the business side.
Love it. This is fantastic. I feel like I could be strategizing in my head right now. This is fantastic, Steven. Before we let you go, I do want to talk a little bit about your podcast. You're doing great, by the way. There's the Retirement Tax Planning Services podcast that you've been producing. You guys have been doing it for a while now. Talk a little bit about the show. Who do you have on? Sten was one, and what are some of your common topics?
Yeah, so the Retirement Tax Services podcast right now, Professionals Edition is the one that's out, and I make that clarification because in the fall we'll actually be rolling out a taxpayer-facing podcast. So back to my point about when your clients find out about these opportunities you're not talking to them about. Sorry, but I might be the one telling them about them. We're gonna start, like I said, having that taxpayer-facing podcast as well. But the podcast we have right now, the audience is completely focused on advisors, and so all of my guests are advisors who have had some level of success doing tax planning, and some of them are absolutely crushing it. So yeah, Sten was one of the early guests on the podcast. Benjamin Brandt has been on the podcast. He hosts the Retirement Starts Today podcast, which is one of the highest rated retirement-related podcasts in the industry. Matthew Jarvis, who's my brother and the co-founder of the Perfect RIA.
Nepotism.
He was Kitsis episode 7. I've got multiple former Kitsis interviewees that have come on. So just a lot of really great advisors come on as the guests. And then we cover a lot of different topics, but we always make sure there's some kind of action focus to it. So every episode has action items so that it's never just, hey, what is this? It's always, okay, and now as an advisor, how do I do something about it?
That's fantastic. That's fantastic. Well, make sure you check that out, I suppose. Well, first of all, they can go to retirementtaxservices.com and find it there. I see there's a link for the podcast right at the top of the screen, so you can't miss it. Following up with you, as you've already mentioned, advisors at rtx.tax is how people can reach out to you guys if they have questions or whatever, want to inquire more about the service. They can also go to the website. But I'm sure some people are going to want to connect with you as well. Are you active on LinkedIn and other social networks if somebody wants to follow up with you and make sure they stay connected with you as well?
Yep, I'm on LinkedIn. Just look for Steven Jarvis CPA. You'll find me.
Awesome.
The Retirement Tax Services has a page you can follow on LinkedIn and Facebook as well. And then, like I said, normally our webinar recordings are just for our members. But Mike, I really appreciate you having me on. So if any of your listeners reach out to the advisors at rts.tax, I'd be happy to share a recording of that webinar with them so they can kind of see some of the other things we're doing.
Perfect. Well, we'll make sure we get all of this stuff linked up in the show notes so people can follow up with you and get that information. Steven Jarvis, it's been fantastic having you on the Modern Financial Advisor podcast. Thank you, buddy.
Well, thanks, Mike. I appreciate it. And I don't want to co-opt your ending here, but I always end my podcasts with, remember to tip your servers, not the IRS, because that's what we're here for.
Perfect. I absolutely love it. Fantastic. Thanks, sir.
Thanks, Mike.
Thank you very much for listening to and or watching this episode of the Modern Financial Advisor podcast. It's always great to have you with us. I hope you enjoyed the show. Huge thanks to Steven Jarvis of Retirement Tax Services as well for joining us. Now, before I let you go, don't click stop yet. As I mentioned at the top of the show, please do be sure to check out the new Solutions Partner program by swinging by info.truelytics.com/solutions-partner if you haven't done so already. Now, if you're a financial advisor, you might be thinking, why do I want to check out the Solutions Partner program? Well, here's the deal. If you're like just about every other financial advisor who listens to or watches this show, chances are several times a week, somebody hits you up on LinkedIn in your inbox saying, hey, we work with financial advisors. We can help you get more leads. We can help you improve your business. You're getting them in your email inbox as well. Why don't you make sure that they're the best solutions provider for your business by asking them, hey, are you part of the Solutions Partner program that Truelytics has just rolled out? If not, you should check it out because Truelytics is how we roll. It helps us with our business. And if you want to work with us in our business, you need to be a part of that program. That would be awesome. So again, send them to info.truelytics.com/solutions-partner. They'll thank you for it. Trust me, it's awesome. All right. Hopefully you're having a good day. Please stay safe. Be nice to each other. All right. We'll see you next time on the Modern Financial Advisor podcast. See ya. Bye.